Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. Do not keep any more funds than you need for trading on any given exchange. The whole point of leverage is to allow you to reduce counterparty risk. Please take that seriously. So, BTC monthly close is coming up in 3 days. 35k is the key monthly level. This is one of those meme ones where if we close above it, it's bullish. If it goes below it, it's bearish, which is helpfully unambiguous. The part that is ambiguous is the passage of time, which is to say that even if the monthly closes above 35k, it doesn't mean it's going to go to 44, 46, which is the next level, or towards 60 in the next 2 or 3 months. So if you consider what an hourly chart might look like, you reclaim a level and then the next 1 or 2 hourly candles pull back and then you shoot off. Or you reclaim the level and you get another green candle and then the next 1 or 2 candles pull back before continuation. Now you ordinarily don't think much of these constructions because on the smaller time frames, the passage of time is very quick. However, on the monthly chart, that smaller passage of time on the hourly is actually a month or even 2 months of trading. So all of that to say, while I think the 35k plus monthly close would be a useful and bullish technical signal that we've reclaimed this prior range low, it does not make any guarantees as to the passage of time or how quickly the market would move from one level to the next. So for example, it's completely plausible for the market to close above this month and then next month to be a retest month, or maybe we go up a little bit next month and then pull back to roughly where we are now. These are all quite reasonable and plausible scenarios, the monthly. So even if the signal is of pretty high magnitude in terms of what it means for the chart, it doesn't mean that it's going to play out immediately. So some patience on the monthly time frame may be required, but for the monthly time frame connoisseurs, that should come as no surprise. The levels are still the same, 35k as the clear line in the sand. Ideally, it would also close above 37k, but beggars can't be choosers. Absent that, or otherwise, 44 to 46k is this monthly and weekly range midpoint, and then obviously the 60k range high is the other side of the range. So that's the monthly close. Above 35, good, but it doesn't guarantee instant continuation or gratification for that matter. So we're now to the weekly time frame. 32k is still the most important weekly level in my mind. I've sort of gone back and forth on adding intermediate levels before sort of 44, 46, that monthly range midpoint. I've gone back and forth on, for example, 38k as the opposite side of this cluster. I think it's okay. It's a reasonable level, but again, much lower conviction than the mid 40s. I will note on the weekly, as discussed on Casual Friday, that given that the main bullish argument on the weekly time frame is a weekly reclaim of 32k. At this point, where the market is now, and certainly where it was at the time of recording Casual Friday when this argument was first made, it is quite difficult from a proximity to invalidation point of view to justify longing the market right here, simply because if you were to employ a swing trading framework just on this time frame, your invalidation, even at the time of recording, is about 13% away. Now that's quite far away for a swing trade. Sometimes you can justify these types of trades if the market looks really strong, and also your target has to be both reasonable and much higher. In that case, if your proximity to invalidation maybe not that close, let's say at 13%, but the next big level is 60, 80, 100% away, then it's not such a big issue because the risk-reward problem solves for the absence of proximity to invalidation. However, when the market pushes sufficiently far away from that point where you're wrong, it becomes quite tricky to justify the trade on the same basis, simply because there's so much more space where you could potentially be underwater but not wrong. And that doesn't sound like a death sentence, and indeed it isn't, but it does affect your trade management. If we take this example here, anything from 37 down to 32, and that's not including any wicks, is an area where your idea isn't invalidated, but you're underwater. And this is a weekly chart, so we could be talking weeks and months of trading there, and that just makes judicious trade management pretty difficult to do. And that is the main benefit of trading as close as you can to your invalidation. You both, from a time perspective, get to find out rather quickly whether you're right or wrong on the idea, so that reduces the sort of area of time where you have to potentially sit in underwater trades and babysit and manage in the middle of nowhere. And you also get faster or better, arguably, price resolution when you trade close to your invalidation, because the risk to reward is going to be the largest that it can be when you're trading close to said invalidation. All of that to say, at this point, if you're considering the 32k breakout reclaim candle, specifically this one, as the signal for a trade, it is quite hard to take a trade on the weekly using the same parameters because there's just a lot of space between where you're wrong and where the market is right now. So if you're going to construct bullish arguments, I think they have to be done on other time frames. The weekly, 14% just to retest the level itself is a bit of a stretch, in my opinion. Other commentary on the weekly time frame is mentioned. Potential resistance at 38, but it's low to medium conviction. Maybe I'm just completely sort of psychologically primed and curve fitting after the fact, so I wouldn't take that too seriously. The much clearer and much better level is the 44, 46 monthly mid-range and weekly cluster and sort of market structure level here. It falls at 46k on this time frame, which is basically some form of this cluster, these lows into this lower high before we just nuked all the way. So that is a good level on the weekly and the monthly, and 38, you can leave it or take it, probably leave it to be honest, but I do look at it from time to time. Other weekly commentary, I'm sure someone could come up with a very intelligent sort of candlestick construction here, based on this high and how we've spiked it and haven't closed above. I'm not a huge fan of that type of analysis. I think the most I would add to this weekly time frame is that the shallow pullback level of sorts on the weekly is this weekly candle here between 34.5 and 35k. I think if you were to map this out, you get quite a few reasonable lower time frame levels contained within it on the 2-day, daily charts, 4-hour range low, whatever. So that's quite reasonable, but I don't want to start reading into the spikes and that kind of stuff too much yet. If this starts to round out, like this, and start to loop lower down, then that could become concerning from a structural point of view, but it's just a bit early for that. I'd rather just look at the levels, and there isn't enough here on this time frame to make compelling arguments. You could probably make semi-compelling arguments about momentum slowing down a little bit, but really the weekly probably isn't the best time frame for that. Now onto the daily. This is the only time frame showing some semblance of a bearish signal. It's not particularly sort of high magnitude signal, if you will, but it's something. And specifically, I'm referring to the fact that we had this high set here, and we've now had 2 spikes of the level with no close above. Even if you take a basic, range-bound, range trading understanding of the market and take this as your high, and then, something like 35.4k as your low, now that the market has failed on one side, that would generally suggest some odds that the market trades towards the other side, which would be 35k-ish. I don't want to put too much emphasis on this because it's not, this daily spike type thing isn't taking place at a huge inflection point based on other timeframes, and the weekly still looks good, admittedly far away from invalidation, and we are fighting the monthly close, but it's not as clear as it was previously, so that is something to bear in mind. I would say that the nearest meaningful daily support, if we get a pullback that isn't just an absence of volatility, is this same level that we covered before at 35.4 as the range low, and then the other side of it is probably the lowest daily close in this consolidation at 34k as well. The 4-hour time frame is probably my most fuddy time frame, the one that I like the least. It just structurally looks a bit dodgy if I zoom out. This could completely be a product of sort of BitMEX PTSD and trading some absolutely vile market conditions, but it's not uncommon in my muscle memory, at least, that traumatic muscle memory, that you get a sort of grinding up, walk up, higher low, higher low, higher low, ad infinitum price action, and then it just gets completely flushed. All of these trailed stops get taken out, and you fill a decent chunk of the thrust candle, the thrust portion of the move, and that so-called inefficiency. Now, is there any compelling evidence at the moment to believe that that's going to take place? I personally don't see it, or at least I can't make a purely technical case, so that's entirely sort of gut-based or something to be aware of. If that were to happen, I think the only 2 areas to do business would be an overthrow at the trend line, and you could probably reconstruct this to make it neater. I've just kind of squiggled it here, but by overthrow at the trend line, I mean an attempt to break it down that would look like a trend break, resulting in a reclaim. Something like that would be nice, at least in the short to medium term, especially if you see a lot of sell pressure and negative delta absorbed at this point. You could have your new invalidation when the market reclaims, and at least you have some sort of argument for a flush and a decent sized dip. Absent that, I think if the trend breaks and the market really starts to accelerate from here, I personally would be pretty conservative with knife catching on this, because it's not uncommon for the market, having built up a sequence of very convenient higher lows, to take out all, if not most, if not all of them in one swoop. So I wouldn't be sort of punting this too early in that case. I'd probably defer to the daily levels, or look to do business very greedily, at least on a wick basis, towards the extremity of where the higher lows started building up, which would also be around 33.6, 34k. It could well be that these are just the hallucinations of a broken man, and instead we just have a more moderate conservative range before doing whatever post-monthly close. I don't think we're going to get super clear resolution ahead of the monthly close. So I kind of expect these conditions to persist at least for this week. But after that, we can see how the monthly and weekly look and try to come to some sort of clearer argument. But yes, my PTSD FUD time frame is probably the 4-hour one, because I just don't like these super long diagonal type of constructions. So make of that what you will. And yeah, absent that, it's just been a bit shitty, hasn't it? That's all for BTC. Hope that makes sense somewhat. On the ETH front, still nothing to write home about unless you're writing home to complain about ETH, in which case there is plenty to write home about. We still have the weekly breakdown and retest at 0.57. That just looks like a bearish retest and a breakdown of a very long range. So unless the technical picture shifts, it's just very difficult to be bullish ETH. Again, structurally, contextually, flow-wise, perhaps post-Bitcoin spot ETF would be a decent spot to do so. You know, ideally the market's holding above the 30K-ish wall of worry, and the speculators are expecting the market to just continue going up, or at least for the worst portion to be over. Well, I guess almost everyone believes the worst portion to be over, as do I. I think 15K was the bottom. What I specifically mean is a notable regime change from this to something more bullish, not just in Bitcoin, but more dispersion in the market. But so ETH can go up, alts can go up, get some retail punters in, so on and so forth. I think decent evidence of that would be ETH BTC strength, or ideally that bid coming into the riskier parts of the market post the Bitcoin ETF. So we can maybe just jump from one narrative to the other and play narrative leapfrog and go from spot ETF to halving to rate cuts and lower interest rates and all that kind of stuff. But at the moment, the bullishness, at least out of the majors, has been very much Bitcoin centric. And given ETH looks like this, there's no compelling technical evidence for that to change. I think the landscape could be different post ETF. So, you know, the market is forward looking. It's going to be wondering, okay, what's the next trade? What's the next buy? And at that point, perhaps a catch up trade is more reasonable. And you would articulate it by suggesting something like, well, Bitcoin led the market because of the spot ETF. We now have the spot ETF. It takes a while for the positive effects of that to kick in via marketing and passive allocations and whatever, but people are still paying attention to crypto given the news, and they're going to start risking on other stuff. So maybe ETH falls into that basket. Again, the strongest counter argument there is that we've had similar sentiment already, that, you know, the BTC spot ETF has been priced in primarily, and the market hasn't flocked to ETH and instead flocked to every altcoin other than ETH, including meme coins. So it's just a very tough point for this thing. I wouldn't overthink it. I'm just doing the arguments as a sort of intellectual mental exercise, and maybe the reasoning is helpful to somebody. On a technical note, this thing either needs to just wash out completely and move towards 0.4 and some of these prior breakout levels, or reclaim 0.57 at the very least, because this thing has been a very dominant downtrend. So some evidence of reversal would be welcome. There's no such evidence right now. At the moment, we only have a breakdown and bearish retest. On the ETH USD front, still continues to test the bull's patience. As discussed, we have a very disgusting range between 2.1K, which should not be resistance in any remotely reasonably bullish market, and the 1.9K weekly breakout level. I think this was on Monday markets, and again, I mean, the market just really likes these levels. I didn't really know what else to say. It is concerning, again, from a technical point of view, that 1935, I'll make it blue so we can know what we're talking about. This was resistance for so long, and it did everything you would have wanted it to do. You know, we had the fake out, we had the retest, very, very technical, and we finally had the breakout. We had 2 retests at the level already, and that still wasn't enough to break the local high of 2.1. So we essentially have a bit of a dilemma, or, you know, there's friction there, which is either 1.9 is not a particularly strong support, which makes it look like shit, or you have to concede that 2.1 is strong resistance, but that's then irreconcilable with 1.9 being a strong level of support. Because if 1.9 is a strong breakout level, strong support, or just so contextually significant, why on earth is the market stuck for 3 weeks at a shitty level in comparison, only 10% higher? So someone's bluffing, something's wrong. We've also seen a lackluster reaction to spot ETF news on the ETH front, so some sort of narrative exhaustion there potentially. But from a swing point of view, 8 times out of 10, which is a number I've just completely made up, when you get these second breakout post fake out type of constructions. So you have resistance, you have the fake out, more resistance, and then when it breaks above the level where a fake out has already taken place, usually that's a very fast, very powerful continuation signal. Now, in this instance, instead of being a very fast, very powerful continuation signal, it just got stuffed 10% higher and it's been range bound, which is a pretty weak reaction. So I don't want to jump 15 steps ahead and, get into Russian dolls of higher timeframes and discussing this means this, which means this, which means this. I think it's just much easier to look at the market for what it is. If you want to be a bear, below 1.9 is a pretty good place to do it. If you want to be a bull, you should be satisfied with nothing less than a wipeout of 2.1k and just straight acceleration based on the weekly setup. At the moment, neither is true, and the market's just is trading very technically within these weekly parameters. So maybe just pay attention to those, and then if we get high time frame resolution, hopefully that should be somewhat self-evident. But the levels are working, so you can't complain too much. It just sucks that on a swing basis, what should be good setups aren't delivering the type of price action that you would ordinarily expect them to. On the altcoin front, we've seen a bit of a pullback, nothing too crazy at the moment. In last Monday markets, we discussed resistance levels on some of these, on ADA being a pivot around 40 cents. I think we talked about AVAX as well. Solana's continuing to pull back and might give a test of 44, 47. At this point, I'm not super interested in playing close to the market on altcoins, so looking for sort of shallow dips to buy on some short-term trade. I think altcoins will become attractive if a larger pullback in BTC materializes, even down to the daily levels or whatever else, then these should retest reasonable market structure, higher low levels, but this is just a bit too shallow for my liking. I don't like buying altcoins on low Bitcoin volatility, if that makes sense. The only acceptable scenario for doing that is if Bitcoin is low volatility but clearly bullish, and then everyone's just punting alt season. So, BTC might be down 0.3% and then altcoins are green. That's fine. But if BTC is dipping just a little bit and the rest of the market kind of shits itself proverbially, that tends to be a bit less interesting. And again, this kind of weird, droopy 4-hour construction I'm not a huge fan of. I don't want to be caught holding shallow dip altcoin bags, buying 2, 3, 5% pullbacks if they're going to go down 8, 10, 15%. Not that that's my base case. I just think probabilistically that's a better trade to wait for than shallow pullbacks in alts, at least at the moment. There is, again, some friction or contradiction between my tweet on shallow pullbacks and what I've said there. But again, the resolution to that is I think there's a non-trivial chance that the pullback on BTC is not shallow, or at least that the better trade will come from a non-shallow pullback. So I'd rather wait for that to see if it happens rather than assume it's not going to happen and punt altcoins instead. I also struggle with altcoins when there's no clear sector, theme, outlier type of rotation. And for that reason, I really haven't been paying too much attention on that front. I think that's all I've got to say, really. A bit of a boring-ish episode, I think, but that's understandable given that this is the market that we're dealing with. Hopefully some of that was somewhat useful. If it was, let me know in the comments. If you haven't listened to Casual Friday, we had a lot of fun on that episode. So if you want to move away from the dreary vibes and have some laughs, that's the episode for you. Thank you to Woo for supporting the show as always. Thank you to you for listening to me drone on about basically nothing. Hope you'll have a fantastic week, and I will see you on Casual Friday. Goodbye.